Well, there's enough and more buzz within the auto space, given the fact that the government has come out with a new EV policy to try and break down as to what the opportunities are in this space, to try and get more perspective on what the policy means for the sector in the longer term. We have with us a senior analyst from LKP Securities. We have Ashwin Patil with us to try and break some of these metrics down. Ashwin, talk to us about this development with regard to the EV policy. Is it a welcome step for Indian manufacturers across the board? I'll go into subsectors, but across the board, is it a welcome step, or do you believe that large competition from abroad will also come through and impact the sector?
See, I believe that the EV penetration in India on the PV side is just about 1%, and there is a large room for everybody to come and enjoy the pie. So, prima facie, I think that it will be slightly competitive scenario for the domestic incumbent players like Tata Motors, Mahindra and Mahindra. For example, like Tata Motors is having a strong market share in the EV side, more than 70%, and that can get hit a bit. But surely they have the first mover advantage and they can take on the competition, very well. So maybe like a slight 5 to 10% kind of market share hit they may get. But definitely the EV policy that the government has come out with, it's a welcome step for everybody. From global point of view, I would say that companies like Tesla, etc., are very eager to come into India and set up their EV ecosystem over here. We recently saw that MG had a tie-up with JSW. So JSW have very ambitious plans in India to on the auto side to expand on the EV ecosystem. They are doing a lot of backward integration, and they want to be in each and every aspect of the EV side. Similarly, other companies are also fancying their chances of entering into India on the global front. So, for the global players, I would say that definitely it's a big chance to enter into India. But for Indian players, slightly towards at the start of this phase, when the global players enter, it can be a bit competitive scenario. But as I said earlier, the EV space is very wide and large, so everybody can enjoy the EV proliferation that is expected in India, supported by this government's EV policy.
And Ashwin, with regard to just purely ticket size, do you think that the larger ticket size kind of companies will be more interested in or rather will find more benefits from this EV policy than the smaller ticket size companies, and therefore maybe to that extent Tata Motors is a little more insulated, because that's largely the view coming from a lot of analysts on the street?
Exactly, that's what I said earlier also, that Tata Motors may face some, slightly competition at the start, but since they are the first movers and first mover advantage is very big in this market. So the big companies like Tata Motors, Mahindra and Mahindra should get that benefit. But certain companies, smaller companies, may face the heat up to some extent. But if they are also having certain ambitious plans, etc., then they are also welcome in this EV space in India, because, as I said, it's quite wide and large over here.
And before I throw this question, into a more open territory to try and ask you your views across the auto space, let me focus in on the policy itself. How would you play this policy? What is the best way to play it from an investor perspective?
See, from an investor perspective, I would say that, for OEMs, definitely it is a welcome step, but it is a bigger welcome step for the auto ancillaries. Because companies like Tesla and all, they are so huge and large that they are providing a very big opportunity for the auto ancillaries, like maybe like Sona BLW, which is having Tesla as one of their clients. So it will open a wide open door for them to get this opportunity, to grab this opportunity, I would say. And there are certain other companies also in the EV space, like Craftsman Automation is also there. They are having one stream of business which caters to the EV market. Also, there are certain other companies which are having their three different streams of revenues. Like one is catering to the ICE segment, second is to the EV, and third is EV agnostic. So, such companies also will be benefiting out of that. So I would play the story on the auto ancillary side more than the auto OEM side, because auto OEMs will be facing competition, but at that time, auto expanding their business to a great extent, because the global players like Tesla, Ford, etc., entering into India on the EV front, I think that can zoom up their performance, the revenues of auto ancillaries up to a great extent in the following years.
Understood. And Ashwin, just purely with regard to the kind of runway this has and the kind of appetite of the Indian consumer, so we've seen that at least at the top end of the income bracket, we've seen very good traction when it comes to EV. Do you think that that can percolate to the bottom end? Of course, two-wheelers as well as two-wheelers are doing very, very well. So that your thoughts around that, on sustaining that kind of growth for two-wheelers as well as for four-wheelers, if you can give us that perspective.
See, from EV point of view, if you say that two-wheelers like scooters are very fast and rapidly getting electrified. On the passenger vehicle side, I would say that still there is a EV wave yet to come, and LCVs are getting electrified also along with scooters. And the third segment I would say is the buses segment, which is getting into the EV segment at a very good pace. So these three segments, whichever companies are into that, they will be facing a lot of benefit. So out of the OEMs, I would say that Bajaj Auto, TVS Motors, those are the two companies on the two-wheeler side which are having a good presence on the EVs, and they are expanding also very well. Then on the passenger vehicle side, Mahindra and Mahindra and Tata Motors, also Ashok Leyland on the buses side, and the LCV side, I think they are also getting a lot of benefit, and they should get benefit out of this EV policy and the widespread or the penetration increase on the EV side for the passenger vehicle front. So I think these companies should get more benefit than others.
And the traction will sustain, the demand will sustain now on a higher base.
See, I think that the demand is definitely going to be there. So higher base is still, I mean, last year's base was definitely higher. We know that because the IC segment has been performing well. But if you add EV's performance going forward, in the coming few years, I think the performance of these auto companies is going to be very good. Though we all know that EVs, the margins on the margins front, EV business is not, very lucrative. But going forward, as the volumes increase and the battery prices, the batteries become affordable, etc. So and the whole infrastructure on the EV side expands very well in India. I think the volumes, the operating leverage should come into the picture, and that should sustain the margin performance also going forward. So for automobiles, I think that maybe like FY24 can be slightly on the slower side because of the higher base. Sorry, on FY25 I'm saying would be higher on the higher base of FY23 and 24. We may see some sort of slightly subdued kind of growth. But going forward, FY26 onwards, we think that the auto segment will be having a very good time.